The S&P 500 added $2.5 trillion in market cap in 1 week, now making it worth over $70 trillion. A deal with Iran to open the Strait of Hormuz could be announced as soon as Monday. The stock market is in the biggest historical technology run ever recorded in history. And for the first time in the last couple of years, Warren Buffett, one of the best investors in the world, has started to buy stocks again and lean bullish on the markets. In this video, I'm going to explain all the news events you need to know. I'm going to explain the game plan and trades that I'm going to be looking at this week. And if you don't know me, I've been trading for 7 years. I have a major in finance and a minor in economics. Let's get into the video. All right, so the S&P 500 closes at the highest level on record, and it's up $2.5 trillion in a single week. With this being said, a lot of people just don't understand why we're experiencing the growth that we've been experiencing recently. And that's why in this video, not only am I going to explain why we're experiencing this growth, but I'm also going to talk about my game plan and the trades that I'm going to be looking at with the real charts as well. So far with the S&P 500, 88% of S&P 500 companies reported earnings, and the index has posted 50.4% growth in earnings year over year. Just to put this in perspective, the already astronomical expectation this year was about 23.1%, which has now been doubled. So the expectation has been doubled on the S&P 500, and that's why we're seeing such a big move to the upside. And on top of this, this will now mark the second consecutive quarter of earnings growth above 25% and the seventh consecutive quarter of double-digit earning growths for S&P 500. The last time growth was this strong was in Q2 2021 as a US economy emerged from the pandemic and $4 trillion in stimulus was handed out. So if you were trading during that COVID time, you remember when the market dipped and had a huge rally back to the upside. Well, that was because we had $4 trillion in stimulus given out to retail. However, this time we are simply seeing it through company growth. And that's exactly why we are arguably in the midst of the biggest technological revolution in the US history, and the data that we're seeing today we have not seen before in history, and that's why it's very important to pay attention to the market we're in. To further illustrate this point, corporate America is currently on pace for the biggest earning beats ever recorded. The S&P 500 companies are beating earnings per share estimates by about 29.2%. So to put this in perspective, the 5-year average stands at about 7%. The S&P 500 companies are now beating this by about 4.2 times the 5-year average. What makes this even crazier, if you're not understanding how crazy this already is, even if you removed Google's $98 billion gain from unrealized equity investments and Amazon's $53 billion gain from Anthropic, the S&P 500 earnings would still be up 32% year over year. And this is why whether you're a brand new trader or a seasoned vet, pay attention to this video. Make sure to subscribe to the channel because I make these videos every single week. And that's why whether you're a new trader or a seasoned vet, you need to watch this video because I'm going to be explaining exactly what I'm going to be looking at in this market while we're in one of the biggest investment booms in history. To understand what we have to do, first we have to look at some of the biggest people in the industry. So Berkshire Hathaway, which is of course Warren Buffett's fund, this was sitting on $397 billion in cash for almost 14 consecutive quarters. However, recently, instead of continuing stock sales, Berkshire was a net buyer of equities in Q2 with $19.8 billion in net purchases. Berkshire now only holds $364 billion in cash, and the company invested $10 billion into Google during Q2 and acquired Taylor Morrison Home for about $6.8 billion. Berkshire bought another $23.5 billion of equity securities in Q2 and sold about $3.7 billion. So you can see that Berkshire Hathaway appears to be leaning bullish again, and this is of course one of the greatest investors of our generation, and we need to see what he's doing in order to create a better game plan and thesis for ourselves. Now, with all this being said, what does that mean for the names we trade? Well, specifically coming into this week, we can see we do have a little bit of news events. So we have core CPI, that's going to be on Wednesday at 8:30 a.m. This is red folder. This means it's a high impact news event. And then we have core PPI, and that's going to be at 8:30 on Thursday. So both of these are important events that you need to be mindful of. That Wednesday and Thursday we have red folder news, and other than Wednesday and Thursday, the only time we have news while the market's open is on Friday, and that's going to be at 10 a.m. In terms of how investors feel right now, for the last 4 months, we've been really just hovering in that fear and neutral category, but now we are finally coming back into greed. So this gives us a better understanding that retail is now being a little bit more bullish in the market again, and therefore this gives us a better understanding of how we want to go into the market this week for our trades as well. And finally, for major earnings this week, there's not really too many earnings that I care about primarily. A lot of the earnings that I wanted have happened throughout the previous couple of weeks. We have earnings like HIMS, SMCI, CRWV, Cava, and SPCE, but a lot of these are just mid-cap names that won't really move the market aggressively compared to the semiconductors that we had last week. And that's why I'm not as interested in playing earnings this week on these specific names. But with that being said, now let me go over to the charts to show you exactly what I'm looking at this week and the key levels that I have prepared to see what the stocks do. All right, so let's get right into it. The first stock we have here is the S&P 500 or SPY. As we can see, this one is moving up very, very aggressively. I gave you guys these key levels for the past couple of weeks now. Remember, if you want to see continued market updates on this channel, make sure to leave this video a like. Let's see if we can get 1,000 likes on this video, and make sure to subscribe to the channel down below as well, as I make these videos every single week. With this being said, we can see the S&P 500 really came up here, had a little bit of consolidation, and now is breaking out back above into all-time highs. If we go on the weekly time frame here as well, we can see buyers have stepped up very aggressively. Last week, I told you about this consolidation and to keep this in mind, because if we do break to either side, we're gonna get a big move. We ended up breaking to the upside, so we got a really nice move, but now what am I looking for? Well, there's two different scenarios that I'm gonna be looking for. The first one is simply going to be a retest of this previous high. So this previous high that we have back here, I would want the retest for continuation. Or if the market wants to continue to be bullish, then I'm going to be looking for the break and retest back above all-time highs, right? So just continuation of this trend. That is something that I'll also keep in mind. That will be more for day trades, of course, but a better swing trade opportunity for myself would be if we dip back into the 758 area. And this is where I would be looking for more of a swing trade for continuation back to the upside on the S&P 500. In terms of the QQQ, we can see this one has a little bit more consolidation. It's not back at all-time highs just yet. However, what is Qs doing? Well, Qs is actually breaking back above. We had a little bit of a dip. It's now breaking back above this previous pivot structure. And on top of that, on QQQ, if we go to the weekly time frame, we can see we actually put in a pretty bullish weekly candle. So the previous weekly candle we put in was a hammer stick candle, and now we're putting in another bullish candle. So what am I going to be looking for this week? Primarily this week for bullish momentum, because we already came back and retested this gap. We can see we have this little gap here on QQQ. We already retested that. Now what I'm going to be looking for is going to be a break, a retest, and continuation of the 726.30 area. QQQ can come back up into all-time highs because SPY's at all-time highs. However, we need the break back above 726.30s. So this previous pivot structure of Wednesday, August 5th, or if we go back here, Friday, July 10th, I would like the break above, a retest, and then continuation back to the upside on QQQ. This one is a little bit more bullish for me. In terms of Apple, we can see we had earnings. We had a drop on Apple. I gave this exact key level last week as well. But what I'm going to be looking at on Apple is just going to be continuation back to the upside, because we do have a gap. So what I'll be looking for primarily is going to be the break and retest of this 310.65. And as we can see, last week I said that we came back for the retest. So now really all I need to see is buyers stepping up. If buyers can step up on this down close candle for continuation, this is the room that Apple has. If we can see buyers stepping in off of this area, I'm going to be keeping an eye out on Apple for a bounce up into 317s. So that's going to be my main game plan coming into this week on Apple. If I want to trade it, is going to be that continuation play back to the upside. Most likely though, I simply need to see more buyers stepping in off this 310 area for continuation back into 317s. And if it can break above 317s, then we have this clear gap here at 319.47 as well. For Tesla, this one is not bullish for me, and I'm not bearish either. This one came back into consolidation after earnings, and you can see this earnings candle high compared to the low that we put in. So 338.28, I need Tesla to either break above this area for continuation, or I need it to break back below 299.87s. In between this range, I am very, very neutral on Tesla. I'm not bullish, I'm not bearish, I'm just extremely neutral because it can just consolidate in this area. For Tesla, for me, yes, it has a gap fill, and that's exactly why if it breaks back above 338.28, I'm going to be looking for that full gap fill into 368s. However, if it just consolidates here for the next week or potentially 2 weeks, I'm going to be a lot more neutral. In terms of AMD, this one, if we go to the weekly time frame, we can see some buyers are stepping up on AMD. We can see buyers started stepping up, but we did kind of make this an inverted hammer candle still, even though buyers stepped up on the weekly time frame. What I'm going to be looking for on AMD primarily for myself is going to be a break and retest at the this 502.82 level. So I needed to break back above because we can see this is where that support level was. We broke below once, twice, and now this is the third time. So I need to see a reclaim entry. If we can see buyers stepping up with strong price action on the daily time frame and then retest this 502.82, then I'm going to be looking for that 600 whole psychological number or that all-time highs on AMD. This one just for me is a little bit more neutral. It's not breaking market structure necessarily because we can see we keep holding this down close candle. Even on Wednesday, July 29th, we held the down close candle, but I do need to see a little bit more buyers, and the only way I see that is above 502.82s, the retest and continuation. I'm not that bearish on AMD just yet. I'm only going to be bearish if we break back below this down close candle, look for the retest, and then continuation into the gap fill, which is 362.28. On Nvidia, if we look at Nvidia on the daily time frame, we can see this one had a really nice push up consolidation for months. So almost from August 2025 to April 2026, almost a year of consolidation. And then we broke up again. Once we broke all-time highs, this was about April 27th of this year. We can see we then consolidated for a little while. And now we can see we're breaking back above another consolidation period. For Nvidia, I'm not bearish anymore. However, what I would like to see potentially is a retest. So if Nvidia does come back for a retest of this 213.86 level, we can see we also have a small little gap here as well. If Nvidia wants to come back for this retest, this would give me more confluence if buyers step in near this area for a swing trade back up into all-time highs. However, if Nvidia doesn't come into this area, then I'm simply going to be looking for day trades this week above this previous Friday candle high. So above Friday candle high, a retest and continuation into all-time highs. That's something I'll keep an eye out on if Nvidia wants to continue this bullish momentum. However, if it does want to slow down and it wants to come back for a retest, it would still be very healthy and bullish for Nvidia to come back into this gap fill, 213.86, for continuation back to the upside. In terms of MU, this is another semiconductor. Buyers were stepping up very aggressively on this for the last couple of months, really, and now we can see it's slowing down. Now that it's slowing down, for me, MU needs to break back above 1,015.52s for me to be bullish. That's simply the case for MU. I need it above 1,015.52s. That would be the most bullish for a move back up into 1257s. If I'm bearish on MU, I need it below this gap plus this down close candle. So I need a break below 800s, a retest of 800s for a move down into 659.19s. Right now, MU primarily is a little bit more neutral. If we go to the weekly time frame as well, we can see we simply just came back into that gap fill. Even on the weekly time frame, this is coming back for the gap fill, but buyers are stepping up. So this week, primarily, I'm going to see what price action we get. Primarily, I need it above, like I said, 1,015.52s for me to be bullish back up into all-time highs. For SNDK, very, very similar. So we can see SNDK on the weekly time frame. Buyers have brought the stock up aggressively for multiple months. However, we are now dipping on SNDK. We can see we're seeing more down close candles than green up close candles, of course. And then if we go to the daily time frame, we can see it's a little bit more downtrending. Now, for SNDK, if I'm bullish on this stock, I need it back above 1,517. That's going to be the key pivot structure. That key pivot structure comes from these previous support levels here, this once, twice, 3, and 4 times. So I need the reclaim back above that area if I'm going to be bullish on this name. However, if this one wants to continue down, then I'm simply going to be waiting for the break back below this down close candle or this gap, the retest of the Thursday candle low for continuation. So this is the Thursday candle low right here. This is the retest I'm going to be keeping an eye out on for continuation to the downside if SNDK wants to show weakness coming into this week. However, if it doesn't want to pull back, then I'm going to be looking for buyers only above 1,517s. That's the way it's bullish. Other than that, you can see we created a high here, a lower high, a lower high, a lower high technically, and that's why I need it to break back above this lower high to show that it is bullish for continuation back to the upside. For INTC, this one is reclaiming back above that 100 area. For me to be bullish on INTC, we can see it's actually consolidating quite a bit here on the weekly time frame. We can see buyers are stepping up on INTC as well. What happened on INTC last week was we broke a very key support level. So this was that 95 area. We broke this area on INTC. It needed to hold. However, on the weekly, as we can see, it ended up coming back for the reclaim. So for INTC, for me to be bullish, I need it back above this green box. So I would like INTC a break back above that 105 area, a retest, and then continuation into all-time highs. If If we go down to the 4-hour time frame, INTC is actually making a flat top here as well, which could be potentially bullish coming into Monday as well. So even on Monday as a day trade, I'm going to be looking for that potential day trade of Friday candle high. So that break above Friday candle high, a retest of that break, and then continuation back to the upside. That's a day trade that I'm going to be keeping an eye out on because of the flat top that this is making after reclaiming a key level, which is that 95.53 area. For SpaceX, this one had earnings. Buyers are finally starting to step in on SpaceX after this 106 low. We can see we had a lot of consolidation near this area. On the weekly time frame, we can see this is the first bullish candle we've gotten in the last 4 or 5 weeks now. And therefore on SpaceX, for me, I said that this is going to be that key area, right? If you go back on this channel, I talked about SpaceX and I said that 106 area, this is most likely where we're going to bounce from. That's exactly what we can see is happening. For me on SpaceX, I'm simply going to be looking for day trades more than swing trades. For the day trades, I'm going to be looking for now just simply on Monday, a previous day high retest, right? So if SpaceX wants to give me that Friday candle high retest and wants to continue trend, I'm going to keep an eye out on that. That's really the only trade I'm going to be looking for on SpaceX. No swing trades for me, just a day trade. And that's going to be on Monday if we can get a Friday candle high, a retest, and continuation. That's the only trade that I'm going to be looking for. However, one thing you do have to remember is because SpaceX on Friday had such a big move, we could just put in an inside bar day on Monday. An inside bar day simply means that the range of Monday's candle is going to be in the range of the previous day high and previous day low on Friday. And that's something I'm going to be mindful of. That's exactly why I only, if I was to trade this, would be above that previous day high, retest, and continuation. In terms of Bitcoin, we can see this one is still in that downtrend consolidation. For me to be bullish on Bitcoin, it needs to break back above $67,000. This is going to be the key area, $67,000 break. That's if I'm bullish. However, right now we can see we're still in consolidation. I'm very, very neutral on Bitcoin. My long term, I always talk about this $54,000 area is what I want. However, right now for me, anything on Bitcoin, just very, very neutral. We've been in this range since June 5th. You can see now we're coming into August 8th and it is still in the same range. And that's why I needed to break above $67,000 for me to be bullish on Bitcoin. In terms of gold, we can see we're actually coming back for the reclaim here on gold. So buyers are stepping in here on gold. Now for gold, the primary area for me is going to be a break and retest back above this previous low. So 4,401s. I need the break above a retest, and then we can look for a move back up into this green box, right? So this green box is a support level, now turn resistance. That's what I'm going to be looking for. So coming into Monday and this week primarily, I need a break back above 4,401s, a retest if I want to be bullish, and then looking for 4,648, which is essentially just this green box continuation. Same thing with silver. This one is currently in that green box or that support turn resistance. I wouldn't be surprised if silver does have a little bit of rejections off this area and then buyers step in off that $54 area again for continuation. However, for silver to continue to be bullish for me, I need it now to break above the green box continuation, right? So right now it could reject, right? I'm saying it could reject this area near that $64 area because this is technically support turn resistance. But for me to be bullish on this, it needs to break back above the green box. Once again, if we go to the weekly time frame, we can see it a little bit more clearly. Right now we can see we're reclaiming this area, but I need the break above a retest of this for continuation back up into $90 and of course continuation. With that being said, those are the trades that I'm looking at this week. If you want to learn how to trade from absolutely scratch, I made a full 3-hour course for absolutely free. The link is going to be in the description. All you have to do is sign up. Remember, it's free. Make sure to subscribe to the channel. If you have any questions, put them in the comments down below, and I'll see you in the next video.